Welcome fellow investors. Today I would like to show you a stock that I've been watching for the past year. I would like to discuss what the company does and what it excels in. Of course, we will also have a deeper look into the data and show you the risks that come with buying into the stock. First of all, I'm not paid or sponsored by the Very Good Food Company. I'm simply interested in the stock and bought a small position recently. So let's start by talking about the business model of the company and look into their objective. The Very Good Food Company is a pretty young business. It started in 2017 and was first listed on the Canadian Securities Exchange in June 2020. If I had to describe the Very Good Food Company, then I would say that it does what every so-called healthy startup is trying to do these days: invent, produce, and sell plant-based meats, or meat alternatives, if you so want. So is this just another Beyond Meat clone? That's something you may think stumbling across the company for the first time. Well, I don't think so. The Very Good Food Company excels in doing lots of different meat alternatives in a very realistic manner. If you have ever looked into their website, you will quickly notice what I'm talking about. Burger, taco stuffing, sausages, and meatballs, all completely plant-based without any kind of meat, are just some products of their portfolio. The Very Good Food Company will take advantage of the significant increase in production in 2022, which will drive the company's next phase of rapid growth. However, there are still many obstacles that may prevent the stock from reaching new heights. A production ramp-up, expected to increase production times 27, will act as a significant catalyst for that. So far this year, the stock has fallen by about 70%. Although this may mean terrible results or terrible prospects, as far as I'm concerned, this is not the case. Just this Friday, the upcoming problematic stock offering dropped the stock by 20%. But this does not explain the continued downward trend of the stock year to date. The reason for the decline in 2021 is nothing more than evidence that the stock market is functioning well. The stock's unsustainable rise is coming to an end, which is mainly driven by the investment community on the internet. However, with the stock price at around $1.60 reaching the level before the sudden rise, Very Good Food Company looks undervalued. So is this company worth an investment? By 2025, the global plant-based meat market is expected to grow to $12 billion. This means a compound annual growth rate of 18%. Therefore, the company does operate in an industry with very high potential. However, this may be a very risky stock, especially after it has provided a five-fold return for investors who successfully entered the IPO day. Although Very Good Food's management seems to be passionate and knowledgeable about its business, it may be wise for potential investors to carefully consider the risks associated with the stock. Currently, the team is very small in terms of employees. On its website, Very Good Food stated that it has a team of 4 scientists in Vancouver responsible for the development of new plant-based products. The company is also currently building a larger manufacturing facility in Vancouver. If Very Good Food cannot allocate funds effectively, it may fall into serious financial trouble. So let's take a look at the negative aspects and risks about the Very Good Food Company. Very Good Food said it agreed to a sale to institutional investors of 15 million units of the company at $2 apiece, with each unit made up of 1 share and 1/2 share purchase warrant, entitling the holder to buy 1 share at a $2.35 exercise price. Next, we have the high stock compensations, which the company is not fully transparent about.
The costs may seem unreasonable if compared to the sales achieved from that much. Right now, it's still too early to draw a conclusion, but if the company has to invest multiple dollars just to achieve a single dollar worth of revenue, then that sort of transaction for sure is not sustainable. We will have to wait a couple quarters to see whether the costs grow alarmingly faster than the revenue, or if the company can exponentially increase the costs and make use of the high production capabilities bought with such expenses. Next, let's have a look into the bull case of the company. So, it still has a lot of growth potential when compared to other companies, like, for example, Beyond Meat. But can the Very Good Food Company rise to such heights, or will it be crumbled before reaching any substantial growth? For this exact reason, I prepared my own bull case of the stock, considering the employees, directors, future production capabilities, and of course, my own safety margin, since most sources will be from the Very Good Food Company and their very ambitious investor presentation. So, let's start with the future production. The Very Good Food Company plans to increase its production by 135 million pounds annually. What do I expect? So, let's say in the year 2023, Very Good Foods will sell an annualized amount of only 105 million pounds, which would be 25% lower than their estimated production capability. The current selling price is $7 for wholesale and $14 for e-commerce sales. I'm going to put a safety margin here as well by expecting the total selling price for each pound in 2023 to be between $5 and $8 because such high prices may not be sustainable and I want to be on the safe side when estimating their future revenue. So that would be an expected sales amount of $525 million to $840 million. Given the current adjusted gross profit margin of 39%, the future sales amount makes the company look massively undervalued. Considering the hyper-growth aspects of Very Good Food, the stock may increase in value several times over. The stock is currently priced at $1.56 per share. Given my personal bull case of the stock, a valuation of $45 per share is entirely possible, leading to a market capitalization of about $3.3 to $3.4 billion depending on the outstanding shares and how much the company will dilute its shares by then. The new president, Anna Silver, said she is excited about the future prospects. She sees the opportunities in the plant food industry and believes that the movement of plant-based meats will secure global food supply in the long term. She is fond of Very Good Foods business due to a major reason. The founders being innovative risk-takers with a great vision. Anna Silver is a very competent, trustworthy leader, and she gained lots of experience in a similar market working for Daya, which was the fastest growing plant-based food company in North America. The first-hand experiences let her develop a great sense for business inside small, hyper-growth companies, teaching her lots of lessons, which I think will lead to great opportunities if invested into the Very Good Food Company. Adding to that, despite the stock chart of the Very Good Food Company being in a downward trend for about a year, Anna Silver already proved herself to be loyal to the company. Just recently, she bought about 34,800 shares at a price of about $2.01, which lists the total value of stocks acquired at about $70,000 just recently. Don't get me wrong here. Insider purchases are mainly done due to tactical reasons and to assure us as fellow investors of the company's prospects. Nevertheless, I appreciate the trust Ms. Silver puts into the company by buying a significant amount of shares herself. Now, let's get to the conclusion. There are major risks involved with investing in the very good food company, but the rewards seem to outweigh the risks. The US expansion is critical for the company's long-term success. High compound growth rates of the entire market may lead to an amazing success story of the very good food company. Nevertheless, very good food is a risky stock. You should be aware that the company, as it is right now, is burning through millions of dollars every month, leading to big losses. Therefore, in the long term, the very good food company will have to face a great challenge where they have to fit increasing demand and ramp up production while keeping the company alive until the day they can finally make profits. Once the company can make sustainable profits, the stock will skyrocket for sure. But until then, it's going to be a long while. Just like other growth and hypergrowth stocks right now, the main focus of the company is to grow as fast as possible. So what do you think of the stock? I would love to hear your personal opinion on whether you bought, sold, or plan on buying into the stock. Would love to hear your feedback and feel free to tell me whether I've missed details in my quick stock checkup. If you don't want to miss any more videos, make sure to subscribe to the channel. There will be lots of future stock videos in the future. In case you have a wish for a certain stock review, you can just write me in the comments.